and welcome to another episode of Stance on Finance, a podcast where we demystify the complicated world of finance. So today we have with us here David Pinto, a Christ alumni, a chartered accountant and a corporate finance professional. He's also a career counselor mentoring CA students. David, it's great to have you here today. Can you let our listeners know a little about yourself?
I'd be happy to. Thank you so much for having me. So I'm currently working in the IT business of ITC Limited, which is ITC Infotech. I'm part of their corporate finance team. Other than that, what I've been doing is I've been going to schools across my home state, Goa, and talking to students about CA, the profession, how it works, how do you live as a chartered accountant, what are the opportunities. I feel that's so difficult for finance professionals to get that kind of guidance because the college and the entire types of courses that we do are very fragmented.
Yeah, there's a stigma around CA that it's a very...
Absolutely, that's very difficult and that you're not able to clear it. When I started to do CA, everyone told me, you're a very chill person, in quotes, and they're like, you'll never do it, you'll never clear. And I proved them wrong, which was one of the things that felt very good for me, and that's what I've been trying to inculcate in students across my home state. Other than that, I've been working on financial literacy projects. Right now is the best time to do it. Can you believe that in Zerodha's business update recently, one of the things that they gave, and they are one of the largest stock brokerages in the country.
I wanted to talk to you about that actually, the retail boom of investors in India. Massive nowadays.
Completely. It's huge. And COVID really helped that because everyone started doing it online. Suddenly you felt a comfort. So my grandfather trades, he's 95, he still trades a little bit, occasionally, but he's still used to getting those sheets from his broker.
Right.
But people today don't have to do that because of discount broking, and they had no choice during COVID. That has been able to give a completely different industry. But as I was saying, one of Zerodha's business updates is that they're moving Varsity into different languages. And that was important enough to put on $1 billion company's update.
Varsity was my start into stock investing as well, and I was in 8th standard.
Wow, that's amazing. Beginning. So you've got a live example in front of you on how content and information can put people into this. And I think you should start early. The best traders who I know are people who started really
the Kaman
early.
brothers itself, for example.
Yeah, exactly.
They started at 14.
Warren Buffett bought his first stock at 11, I think.
Because he sold the Coca-Cola bottle caps.
So David, what we wanted to ask you and why you're here really is your vast arsenal of roles that you have taken up, whether it's direct taxation, insurance, MIS accounting, so many things that you have taken up. We wanted to know, what is the average day look like in the life of a corporate finance professional?
Okay, so the corporate finance team that I work in is quite a large team. We focus on things that are non-revenue based, where your business is being done. We look at things like simple things from paying your salaries to paying your advanced taxes, TDS, items which you'd honestly think are day to day, but take a lot of effort, especially because it's statutory. It relates to the government. You make a mistake and you get a notice.
And how is this different from, say, corporate finance in an investment bank? What is it different that you do?
What an investment bank does, when you're working in there, your idea is you're supposed to get deals and large transactions for your clients. Here we make the day-to-day of a company run. Paying salaries, setting up entities for new businesses. All of these come in the corporate finance professional in a company.
Right. Another thing you worked in was treasury management. That's not something we usually hear about, and it's not very known as well. Can you let us know what that is?
So treasury management, in my experience, was doing the liquid investments for the company. Right. And one thing that you learn is a very different thought process when it comes to investing. When we think about investing, you're always like, I'm going to look for the highest returns. That's why so many people invested in crypto. And we all know how that turned out, right? But here, the cash of the company is actually needed for their day-to-day business. If you don't have available cash, you can't pay salaries. Now, can you imagine not being able to pay someone's salary? If it's one day late, I promise you, I've seen it, people get really, really upset.
Right.
And for good reason, right? So the idea is to get as good a return as you can, where your cash is always available to you. And that's what we focus on in treasury management. Of course, if you don't need that cash for a period of time, you look at more longer term investments with longer tenures, but you're not looking for, you won't be investing in real estate. as
So it's
a
a lot of
treasury
working
management person of
capital
company.
management. treasury
Exactly, it's all about working capital
It is a
management.
very niche area in finance. We don't really hear many people working in treasury management. How does one get into it?
So generally, it's my experience has been is because of ITC. As an Indian company, our parent is based out of Calcutta,
Okay.
and what we are required to do is manage our working capital on a day-to-day basis. A lot of multinational companies, while they do invest in mutual funds, they have more of a policy from a group level. You just keep a little bit for your day-to-day. We are a group in itself, while ITC is such a large conglomerate, right? So each of their divisions are massive groups in themselves. We have entities across the globe. So I'm technically working at the HO of one of those,
Okay.
one of those divisions, and that is why I'm able to do this kind of a different role.
Right.
And what role do you think corporate finance plays in a company? Just overarchingly.
I think it plays a very important role. You play a two-sided role. You have two jobs which at times you struggle to maintain, especially because other departments won't like it. The role number one is your job is to find ways for business to run, right? You're looking at completing tasks within the laws, because at times you need a finance professional to explain something to you when you need cash, how to take a loan, or how to do factoring, or anything related to simple things like discounting your receivables, getting cash early, because at the end of the day, cash is king. Having money in your pocket as a company is very, very important. Simple things like that. The other part is honestly like a custodian. Your job is to make sure that, every company, every person working in sales or in any type of business needs to get their job done, and they're looking to get it and keep everyone happy, whether it's their bosses, their customers, or from HR, whether it's keeping employees happy. What finance and even corporate finance plays is being a custodian of the rules and regulations, making sure that everything goes as per the policies. And you won't think that matters, and you'll say, why are you doing it? Does it really, do you have to be so stringent? At times you do. We've had many cases, especially in India, where not following policies has really made a company suffer. You've seen stocks go from thousands to paisa.
Right.
So that is one of the important roles that finance plays, being the custodian, and that's usually the role that nobody else likes when you play.
I'm sure other departments hate you.
Quite regularly they do, but then we try to help them do
Getting
other
their
things,
salaries on time.
getting their salaries on time, and do their job. So
Yeah.
we somehow survive.
Okay.
I wanted to ask you about a flip side of what you've spoken about so far. I wanted to ask you about corporate finance from a more IB perspective. We wanted to talk about mergers and acquisitions. We understand that you've worked in startups and everything. So we just wanted to ask you, what are the key considerations in a merger? What do companies analyze, and how it generally goes about?
So the thing here is we're trying to understand an M&A from the company's point of view, because usually we hear it from an IB's perspective, and here we want a company's perspective. How you guys go?
So when you're looking at an M&A from a company, I could explain to you from pure finance perspective, but what really matters are a few things. The first thing is culture. I know saying this sounds a little bit like cliche, but it really does matter, because the incoming entity, especially when you're buying a company, right? The people who are coming into your organization, whether they will gel with your existing employees, especially in the tech space, because you don't have so many machines. You don't have a lot of capex which you have working, items. You're not bringing large machines. You're not buying buildings. Your value is your people. The moment people are not transferring into this other organization and they're going to leave, then you've bought something for nothing.
Right.
And that is one of the things that I feel matters the most, is making sure you have the right culture. The second thing is, you're always going to try and buy a business which you think can make you money. But the person who's selling that business obviously knows the value of the business he's built, right? So he's going to give you that value. He's going to ask you for a valuation which will justify all the work that he's done and what he's built for you. So it is how you can use what he has built or she has built, to be correct, to make sure that your business grows, creating synergies. Recently, I had written a post about the Inox PVR merger.
Right.
They saved 142 crores this quarter due to the merger between PVR and Inox. That is a significant amount. Considering that they are they have competitors in the OTT space who are really looking to push multiplexes out. This is so important for them, and they managed to get through because of COVID, because their revenues dropped, so they were able to merge these companies, and that is how PVR has managed to grow with Inox by saving money on, say, extra costs that they had to incur separately but now don't because they're together. It's often simple things that you won't even realize where wastage is, but you can cut that out. That actually helps you
more about that, the transition period, when the company's been bought and the workers are being, they're having to go through that culture
merge,
change.
Actual merge.
How does that happen?
So now it really depends on two things. Generally what they do is they ask the leader to move and have a transition phase.
Okay.
Often when you buy companies, and a friend of mine who was working in an MNC, his company acquired another one. They made sure that the bosses of that company stayed for 2-3 years to ensure that there's a good transition, the employees are happy. Because honestly, at that time, what they were facing is, some plant heads and others were just saying, okay, culture's gonna change, these guys are gonna completely move this away. I'm gonna quit. And these were multiple people at relatively senior roles, which could handicap your new acquisition. The other thing is, when you're getting the boss to move over, that is a very important culture decision for an incoming person, because at times you say you're the head of a company, right? You have a certain amount of freedom, but you're coming into a new organization where you say maybe reporting to someone else. The person who's acquiring that company should ensure that that kind of a culture shock is not given to the incoming leader, so that they would be motivated to work in the transition phase.
I think that's something that we've never read about M&As.
No, we read it about more from a technical perspective. The culture part, I think you have to live it.
You honestly do. You have to it's people's emotions at the end of the day are the most important thing in an M&A. It's weird to say it, but it is at times that simple.
Right. Okay, David, you are working in a tech-related company, ITC Infotech, and us as finance students, when we are trying to understand valuations of a company, we found it very difficult to understand tech valuations. We would usually prefer a manufacturing or an FMCG company. We wanted to understand what are these value drivers behind a tech-related company.
Right. I completely understand where you guys are coming from, and it's a very common question. Because the way valuation was generally built up was for manufacturing entities where they had machines, they had tangible product they were putting out. And if you look at, say, legacy manufacturing companies, for example, the Wadias, the Wadia Group, they just recently sold a parcel of land of $500 million, right? So those all come into your valuation. While with tech, at larger companies like TCS and Wipro, you're looking at your growth rate on your products, and the value is the people. When you're looking at startups, which is the real question for valuation, most of the things that investors look at is the market, the kind of the possible market size that the startup can get into, vis-a-vis the competition and how many players are in there. And when you look at this, you're not looking at the market globally. You obviously will not get the reach of an Apple. But if you look at the reach within India, how many people are already in the business, and when you're funding a startup, you're looking that it's going to become the number one or number two, get a significant portion of that market. That's how you tend to get into that business. That's how you look at the funding, and that's how you value it. More than that, it's whether the business that they're in can become a habit, can become a product that people are using, or a service that people are using on a regular basis. How many of us would have, maybe 10 years back, seriously think about it, 10 years back, would you think that a significant portion of the food that you're ordering would come delivered to your home? Today, Swiggy and Zomato.
The restaurant experience was very integral to families.
Absolutely. But today, even in my house, when I go back home to Goa, a lot of times we'll just order in, we'll be relaxed, we won't have to dress up and bother to plan all of these things, make a reservation. It's just so easy, and you still get the same quality of food. Habit-forming products, like Ashneer Grover says. You may not agree with a lot of things that Ashneer Grover says, but definitely the habit-forming products part, that's a good company to invest in.
So the UPI space right now is a very habit-forming thing. As just Gen Zs, if you take us, we don't carry cash anymore.
Instinctively, I pull out my phone just to
ice
Yeah.
cream or something or candy, we
UPI.
want a UPI because of how convenient it is, and it's become a habit.
I know there's nothing that you can't honestly pick up over UPI anymore. Even
Yeah.
when you want to go and get a tea, you know,
Yeah.
at a shop, you're going to
12
use
rupees tea.
UPI. And I mean, I recently watched this podcast by Nitin Kamath when he had Navya and the Zepto founders
Right,
on
yeah,
it,
even they
and
spoke
they
about
spoke
it.
about UPI, and the idea was that right now it's convenience. We are finally, as a market in India, we're reaching a place where convenience matters a little bit to us on why UPI is being used over products like credit cards, which give you that 1 month credit, and plus, of course, there are reward points. But that convenience factor is kind of getting into the market that we're in. At least the kind of
It's like
investments
credit
in-
also is doing very well right
yeah,
now. Right?
absolutely.
The
Anything
convenience.
where you
Selling
can
convenience.
make it easy, and that's what business is right now, especially in the finance space. Make things easy for people. That's how Zerodha has survived.
Yeah.
Discount broking and all similar types of finance businesses.
That's what Grow tried to do as well over
Yeah.
Zerodha. Try to make trading a little simpler. Try to make the UPI, the UI UX much simpler. Have that convenience factor in it.
Absolutely. And honestly, everybody in that space, whether it's the stockbroking or now they're also getting into asset management,
Yeah.
the idea is to make it simpler to invest.
Right. So if you think about how our dads, if they wanted to buy FDs or if they wanted to invest in FDs or invest in a fund, they would have to like walk into a bank or walk into
Yeah.
a fund house and go through all that papers and all
Now
that.
that
Now they
everything
don't
is
have to.
dematerialized.
I have this like a really one of the things I did I had a break after during the pandemic, just after the first wave. My grandfather's around 95 years old. He still trades sometimes, he still goes, but he's quite old, so he likes those papers. So I used to go to his broker and get the papers, and the guy is looking at me. He's like,
Nobody
"You
does
look
this."
young. Why are you picking up these papers?"
Right, okay. Makes sense. Okay, coming to your LinkedIn. Everyone listening to this podcast right now, I urge you all to go check out David Pinto on LinkedIn.
Please
I
do.
am a huge fan. I read it every day.
Every day religiously go and check out his LinkedIn. He has a new post every day that he puts out. So valuable. I mean, just it's a 30-40 second read and it gives you so much information. Please never stop doing it.
Thank you, guys.
Yeah.
I'm really happy that I'm able to provide a little bit of value to people.
And we want to talk to you about the literacy side of things also, no?
Yeah.
Yeah.
Firstly, we want to understand your thought process behind what goes into this post that you put out every day. And second, you as a finance professional, you've done a lot to give back to the community in terms of your, financial literacy projects and your mentoring. So can you speak a little about that as well?
I'd be happy to. So, as far as financial literacy projects go, for me, the idea started when I started investing, and I needed to read information, and I'd start reading articles, try to understand about a certain stock, how something was working. Often, I made silly investments, and I lost money during bull runs, which is, that's a little bit
Impossible.
difficult to do at times. Pick one bad stock, over-invest in one thing, not diversify your
Telegram
portfolio.
advisors.
Telegram advisors, correct. And I think the times where I've lost the most money has been tips.
Tips. Oh
It's
God.
been easier if I study on my own, which I personally feel that.
I have been more profitable when I'm guessing than if I go on tips.
I completely agree. I took this one tip once and I lost, I didn't invest much money in that, thank God, but I lost 50% of that investment, and I made 4 other investments within that month, and all of those were profitable, all of those were based on my own reading. After that, I learned my lesson very hard. And that's what I try to do. There are so many people across the country, right? You keep on hearing the stock market penetration is 5%, and then the argument on that side is the income level will not allow most Indians to invest. But I think there's a large set of Indians, right? Whether there are people like us who are just starting to work and earn money, or there are people of our parents' age who don't trust the markets because the opinion, I heard this the first time I heard about the markets too, around school and stuff like that. It's like gambling.
Risk.
Right. Yeah.
Very risk averse.
Extreme risk. But the fact is, if you have a certain amount of information and you are investing in reputable companies backed by successful management, not a significant amount of debt, you are mitigating that risk. Of course, investing in the markets has risk. I would not ever say that it doesn't. But you are able to mitigate it by doing that amount of research.
Right.
What I felt is a lot of the times when people were putting out content and writing about finance and research, it was very theoretical. And I would have to Google every third word. I'm not going to say. I would have to end up Googling every third word on so many different pieces that I would be reading. But at that point, what I personally realized for me, if I could make it just a little simpler, that would be helping. And I was going through the LinkedIn journey at the time. I started writing, and I realized that people care about just a few things. You can give them a lot of stories, but they only want to know, as far as it's a finance person, how can I save money, how can I make money?
True, especially with so many newbies entering the market right now, with the increase in Zerodha's users and Grow's users, I feel that's very important. We're so misguided by these financial jargons and complex terms that make it sound so cool. What you told is very important.
Yeah, I mean, I recently, there was this Supreme Court judgment on telecom companies on how they are treating their annual license fees as capital expenditure. So you won't get the tax benefit. You have to take it over 20 years, right? So I downloaded the judgment, I looked at it, I read a couple of articles, and all I did was simplify it into bullet points. If you really think about what I did in that piece, all I did was explain multiple paragraphs in bullet points. And give my opinion about it. The 14,000 crores, how much it's going to cost them, explain it with an example.
How much of a dent it's going to make
in the companies, the effect on their EBITDA. To pick that together, I read around 8 different articles plus the judgment of the court.
And you had 6 lines to say.
And I put it in one place.
Very nice.
Because
so
it was
beautiful.
simple. In actual practice, it was very simple.
Yeah, I think that's very important that, there's easy information to digest out there. Literacy can be hard to impart, which is what you are doing with, I think, your Mentorverse and the CA kids that you coach.
Right. So when it came to the CA career counseling that I've been doing, the CA Institute has tried to get chartered accountants involved in going to schools across the country, and I'd say busting myths about the profession.
Okay.
When I started doing CA, I don't think there was a single person who told me you can do it. I think everybody went the other way and said, wait, you weren't the best student in class, you weren't the guy who was topping. Frankly, I wasn't. And they were like, you're not going to get through it. Why are you wasting your time? You'll simply waste so many years and not clear CA. I finished my CA at 22, and what I'm going around to schools to speak to students is, it isn't that difficult. You need a plan. You need to be focused and see the opportunities from this profession, especially with finance, right? When it's so fragmented, you have so many different courses. You don't have that kind of information available. And a lot of times what you read online, certain interests push you one way, certain interests push you another way. If you read 4 different articles, you can see opposite things, and then you're completely confused.
And then you're in that stigma of
Absolutely.
how difficult CA is. Even I faced it. I was told CA is very difficult.
I looked at CA versus ACCA versus CPA versus all of these, and other than the letters, honestly, after a point I was like, what is the difference? I'm completely confused. Right? Yeah. So I think that's what's important to me, is just give people information, and even if it helps a single student, move into a profession that can improve their life, that's enough for me.
David, what I wanted to ask you was sort of a flip side on what you previously mentioned about the advantages that we have of financial literacy. We see these investing newbies enter into the market and lose money on overtrading, speculation, emotional buying. Telegram channels. I've fallen for scams. Well, right? So I just want you to talk about the flip side of that how financial literacy can get these people into sort of trouble too much with.
So to be fair to this, I would say that it's not financial literacy that's getting them in trouble, right? How many people do you know who have gotten into the markets because they've gotten on a WhatsApp or a Telegram group, like you said?
We started out like that.
They will be given a certain number of stocks that should be bought. They'll be given tips based which they would have paid for, a course which they would have paid for, and shown a P&L which doesn't exist.
Right.
That is what is putting people in trouble. Financial literacy is knowing that P&L is not real, that group is rubbish, that you should not be paying people to give you stock tips who don't have a SEBI registered license. That is what financial literacy is. I mean, and my own friends have randomly ask me about stock tips, I'll tell them, okay, look, I'm not qualified to be giving you information. This is what I'm personally investing in, but I'm not qualified to tell you, you should invest your money in this.
You should
or that.
always give a disclaimer. No?
Yeah, absolutely. And there should be someone who's registered with SEBI. As far as the groups are concerned, you've seen what has happened, right? People are being arrested right now, and they are asked to pay massive fine, which is really important.
Yeah.
Because that is one of the reasons why people call the stock market like gambling.
Mm-hmm.
Because you're sold that it is like gambling, and only someone who knows how to play the game will be able to help you, which is absolutely not true. It's about being safe, managing your risk, and reading. It's all about information. And see, most of the companies that we're investing in, which we have this benefit in India, India is a growing economy. How many other places would you have companies like Reliance and the Tata Group's companies growing so fast? While if you look at developed countries, companies that have been there for over 100 years, they will not be really growing so much. They would have hit the plateau unless they're completely redefining themselves on a regular basis.
Which is rare.
Very rare. India growing, you can invest in a lot of reputed companies and also,
capitalize on its growth.
Capitalize on their growth, capitalize on the growth of the country, while also being safe and, making sure that you're not going over and above your risks. The moment you cross that risk threshold and the moment you don't consider when you need the money, one of the most important reasons of diversifying investment is not that, you think the market is going to fall or the country is going to crash. Is that you may need money at a specific point of time for any reason. Like you need to travel abroad, you need to pay for your education, someone has a surgery. If you don't have that cash, you may end up selling your shares when the market is down. Then you'll always feel like the market is gambling, right? Even though that's some macroeconomic, like when COVID happened, imagine if you needed cash and everything of yours was in the equity markets.
You probably did too.
Right.
Many people suffer because of that.
And if you didn't have any liquid cash, that's the time when you were in trouble. So it's all about information.
I think before we end it for today, and I'm very sad that this is ending, it's very interesting. We had a more career-oriented question for you, Reshma.
Yeah. See, I love what you're doing, the way you've studied and the position you're at. But usually, even us as students, when we talk about a finance professional, what we see is Excel sheets and PPTs sitting behind till 1 o'clock in the night, working in the office.
Yeah, how true is that? And
how true is that, one thing? And second, what else does the job require other than these two? Yes, Excel is very important, your presentation is very important. But what else can we do as students to, start developing ourselves for these roles?
So the most important thing for a finance professional is constantly updating yourself, reading. And at least a lot of the content that I write, a lot of the, outside journalistic ideas and everything where I'm writing articles and stuff like that, all of that just comes from reading papers, reading magazines, watching videos. But that helps me in work also. This started for me, writing about tax, writing about judgments, because in office I worked in direct tax. Laws kept on changing, so you had to keep on reading about them to do your job on a daily basis. And this, unlike a lot of places where you think, okay, I'm going to stop studying the moment I'm done with my education. When you're in finance, you have to constantly be studying because you work based on laws and regulations.
That's terrible news for us, by the way.
But I mean, honestly, after a point, it's not so bad. You'd consider that, okay, I'm not going to, it's going to be so tiring, it's going to be so boring. But when you see it in practice, that thing that you actually studied helps you do something, that's when suddenly it doesn't become difficult anymore.
Yeah, it's a great answer.
Yeah.
Thank you so much, David, for coming. We're very, very grateful. This was a very interesting conversation.
I'm so glad to be here, and I hope this podcast will be, interesting to some people.
Extremely busy man as well, so he's really taken out the time out of his schedule. We're very grateful.
I'm sure you guys are more busy than me with your CIs.
Right, so we learned a lot. I'm sure our listeners would be very grateful. Thank you so much for coming here.
Thank you.